Good afternoon, everybody, and welcome to today's post-market analysis video. Today, the market was slightly negative on the day. We did put in a small little doji candle. So again, not just because of the doji, there are other factors as well, but the market is showing us some indecisiveness. Overall, what I'm thinking is that the market is trying to retrace to the level where it broke down from in late December. So from this level right here, and it's trying to get back to that all-time high. And then afterwards, we'll see if we sell off or go higher. But again, while there is some symmetry in the move, so if you were to connect some of these candles right here, so there's clearly a lot of symmetry in the move. You had 3 attempts to go lower, which came into a very similar area. And now the idea is that the market probably wants to go test this 209 level. And usually the closer it gets to that level, the more likely it is to happen because these charts, they're sort of behaving like there's magnets at these resistance lines. And so right now the market is still telling us that it's undecided, and that's why today we had a little bit of a pullback. Nothing really major. Today was rather a non-event kind of day. I noticed a lot of people on the forums were bearish, and they were buying puts. I honestly don't think it's time for that. If the market ends up going lower and it's in your favor, by all means, congratulations. But just logically looking at the charts, there's really nothing definitive here. The market is slightly in bull territory just because of the fact that we are trading at the upper ranges in terms of this micro chart right here, this micro pattern. But also on the macro, what we see is that we have this wedge formation. Now, of course, the anticipation is that we would break out and that the level would be pulled towards this all-time high again. But again, if you're a bear, there still is hope because we might end up selling as well. And if that happens, that is going to be a failed bullish pattern, and therefore we would go down very, very fast and probably go down lower than most people anticipated. But again, that's just speculative. We're not even having some sort of a reversal right now. Right now, the market just favors the bulls by a slight margin. Okay, if we continue consolidating around this area, again, the bullish case is strengthened because then we will have 2 bullish patterns in one. Again, strengthening that breakout idea. Also, as long as we stay above the 50 MA, and maybe even if we retrace into this gap window right here, we still might make the case for some bullishness. So again, as long as you don't take out this pattern, so far bullish, and as we go down lower, we can still maintain that bullish mode. However, if we break down, then we're going to break down very fast. So that's that part on the daily. Overall, the market just gapped down this morning. Again, things out of Greece, as usual. Their government, whoever is in charge right now over there, they said that they're not going to negotiate with the ECB, and therefore they're going to look for a way out of their debt, and by that they will probably exit the euro as well. And so it seems like there's this public drama out there showing us that the ECB and Europe may not be as authoritative as people would like to think. And again, with the issues that we have in Ukraine and other issues as well, just adding a little bit of instability to the markets. And so the markets gapped down this morning. They did try to reverse to the upside, and at some point we had a bullish consolidation, which failed, of course. And when those kinds of patterns fail, we do end up selling for the rest of the day, and that's what we did. We will go into that, but again, before I cancel out the daily chart that we already have in here. What I want to show you is the symmetry in volume as well. And so again, we have this little bit of a symmetrical triple dip move, if you want to call it that, but there's also symmetry in terms of the volume trends. And you know that I love symmetry if you watch my videos. But what we have here, so if we go back from the breakdown, right, from the area where we broke down, we did increase in volume. Okay, so again, that usually means that whatever move is going on is valid. Therefore, the down move was strong just based on the increase in volume. If you go back from here, okay, you will see that we have a similar move, right, also to the upside, but in reverse direction. So in other words, as we were going down, we were increasing volume, and now as we are going up, we are decreasing in volume. And I probably should have drawn that the other way around, right? Let me fix that. So very similar, and of course if I could draw, you would actually see that. We do have a decrease in volume. And I would like volume to increase. That's one of the problems that we have here. We did have an increase in volume to the downside, but now that we are making this, what we like to believe is a symmetrical move to the upside, it would also be nice to see volume going up. Okay, so here the symmetrical move is good, right? We have no complaints because it's in that wedge formation, therefore bullish. But again, what I would like to see is volume to go up, and we're just not seeing that. Okay, and another problem also is the Russell 2000. So today the Russell 2000 was the leader to the downside, and it's going to have to move, and it's going to have to lead the charts, it's going to have to lead the indices if this market wants to go higher. And again, the Russell 2000 has had some positive days, so maybe it was just a little bit of a hiccup there, but nonetheless we need to see the Russell 2000 pulling through for us as well. If tomorrow or the day after tomorrow the Russell doesn't pick up, or at least trade on par with the rest of the indices, that's going to spell out trouble for the bulls. Okay, so those are two things I wanted to show you in terms of some bearishness. Again, I do like to see increasing volume as there is a trend, and right now if we want to say that there is a leg up and that this is supposed to be a strong trend into this breakdown area, then I would like to see increasing volume. So look out for that. If we do see some sideways action or a little bit of upside, I want to see an increase in volume. Very, very important. Now, of course, the other thing are the bonds I want to talk about. So today, the bond yields actually were up, okay? And the interesting thing is that we had bonds that were down, and then the market was also down, which you see very, very rarely. And one thing I wanted to point out, and this is just us comparing the TLT, the 20-year yield bond, excuse me. And so as you can see, on Friday we had a down day, and today was also a down day. It's just that the candle is too small for you to see. But today and yesterday, yields were, bonds were, I don't know why I keep saying yields, but bonds were also down. Okay, and if you go back a year, and I didn't bother looking at more than that, but if you go back a year, you will see that we never had 2 days in a row where both bonds and the market was down at the same time. So that is a very, very interesting occurrence. And again, to me, that is telling me, especially with the VIX, so I have to talk about the VXX. I'll get back to that. So the VXX today should have rallied much, much higher. Okay, it should have rallied much, much higher, and I don't know why it's showing negative on the day, but the VXX was up only 0.5%. And with the market uh, being down more than that, naturally you expect the VIX to go up at least 1.5 or 2% easily on a day like this, but it didn't. And so that's telling us, putting that together with the bonds, that's telling us that people are taking money out of the market overall. So right now they want to be in cash, they want to be in liquid assets, and interestingly enough, you might ask, well, there's also gold. What do you say about gold, right? Gold also gapped down on Friday, and again, this was based on the Commitment of Traders report that we talked about recently. But today, just a little bit of upside, nothing major. And actually, if this base is sideways for a little bit, even though this is some minor support, if this base is sideways and doesn't give us an update, this might go even lower. So the question is, bonds down 2 days in a row, markets down 2 days in a row, gold down 2 days in a row, VIX not really catching a bid today. So the question is, what's going on, right? And the answer, the most simplistic answer, in my opinion, is that people are just taking money out of the markets. It doesn't matter what it is. And right now, they're not even betting on volatility. And I don't know how to interpret that, but I think it might be a positive for the markets because they might just be waiting for the direction of the market to show up, and then based on money coming out of the market, we will have more investors that are ready to invest. So therefore, if we see some upside, if we break out, then we might see a sudden spike in volume, and that of course might help the momentum to the upside to take us to the all-time high and maybe have an even higher high. And conversely, if the market breaks down, then they might use that liquidity to the downside as well, right? Shorting and buying puts. So that's at least my theory based on what I'm seeing. Again, I might be wrong, but that's my theory. So it seems like money is coming out of pretty much everything, right? We should have seen gold up today. We should have seen bonds up today, but they weren't. They were not up at all. And the stock market wasn't up either. And it just means that money's coming out of the markets, and probably these investors or money managers, whoever they are, they're just sitting on the sidelines right now. Now let's look at the intraday here. And I did have a chart right here. Let me see here. So let's look at the SPY on the intraday. So of course I have a lot of different lines. But what I want to do from now on when I look at the intraday is to actually compare it to my pre-market report. That way I can double check my own analysis, and in case you took some of the levels, which again I cannot stress enough, you have to do your own research and confirm. So don't just take my word for it. It is your responsibility to not take my investment advice, but rather take your own or whoever's qualified. But anyway, so before I go into that, again, let's keep in mind that we had this purple trend line, which is in the upper range right here, that we've been talking about. And again, this is resistance that we gapped above, and now it's serving as support. Now let's go into the intraday 10-minute chart, and let's see what's going on. Let me prepare this for you. Okay, so here's where we open right here, this green candle. So we gap down just based on the futures being down, and then we did put in a very significant up move. We came into this pivot right here. Then we sold off, came into this little bit of double bottom. We tried to go above, but here's the problem. We never took out this high right here. So that should have been a warning. Then we retraced a little bit, okay? We went up. Now we did put in, take out this wick right here. But guess what? Look at this pattern. This pattern is a topping pattern right here. So after that, basically not taking out the wick and making this topping pattern right here, this topping candle, we sold off. Okay, so there were two signs that we would sell off. And again, if you look at this chart overall, it is a bearish chart, and so we made a leg down, and then we based sideways, right? Retraced a little bit, and then we went down essentially. And that was pretty much what was going on. And the interesting thing is that we actually tagged this purple trend line, and that was some great support into the end of day. So let's take a look at my pre-market analysis, and let's look at a couple of potential levels that may have or may not have played out. Let me move this to the side. So initially, the 204.92 level on the SPY was some weak support, right? Some weak support. And again, I was writing this really early in the morning, and what happened is that as we got more towards the opening bell, that level got taken out pretty much immediately, right? We came into this pivot right here, so there was some resistance right here at the 205.58 level. Then we sold off, came into this very same area where we initially opened up, so there was some support, right? We went back up, consolidated a little bit, and just when we tried to break out, we couldn't, right? So we never took out this wick, so that was a negative, never took out this high. Then we tried again, we tried, but then we closed below, and therefore this was a bearish signal. So we tried twice, and that was good enough to have the markets sell. The market tried, you could argue, once, twice, three times, and look at all these wicks that are pointing up. And so there were so many buyers trying and trying and trying, but they just couldn't do it. And then by the time we got to this candle, we started selling off. Okay. And the interesting thing is that I mentioned here that I would like to see some support at the 200 moving average, which we did. So we came into the 200 moving average, had a little bit of a bounce, okay? But my ideal scenario was the 204.16 level in addition to the 200 moving average. That would have been an awesome, a very good support. And so if this had happened sooner, right, if the sell-off had happened sooner, it was quite possible to put in that low with the 200 moving average, and then that level getting tagged as well. But the interesting thing is that it wasn't the 200 moving average that was the second factor. It was this purple line right here. So it's very interesting how the market always has a way of communicating with us. We may not always understand it, but we just read the charts. And so what I saw is that today there would be some sort of support at the 204.16, and we actually tagged the 204.13 level. So we were about 3 cents away. So that's still impressive. But I thought that it was probably going to be the 200 MA, but the market actually meant to tell me it was this purple trend line. And so I misread the charts. I knew that there was going to be some sort of support here, but I initially thought it was going to be the 200 moving average. It was that trend line. But of course the markets bounced off of that. It was a really good support, and it couldn't get above these other resistance trend lines, the 200 and the 20 moving average. And so essentially, if you compare it to the open, just a slightly negative day, not really not much to really talk about. And again, going back to the daily, just to recap real quick, what we want to see is, at least if we are bullish, I'm still in the bullish camp. I'm about 70% sure that we are on the bullish side. Now, of course, there's also that 30% chance that we go down. But anyway, so right now we're still okay if we are bulls. as long as, even if we take out this purple line, again we have to confirm below it, and the pattern is still valid as long as we stay above this support level right here. And you could argue even the 200 moving average on the daily would serve as good support. You also have a little bit of a 618, so there's a ton of support here. However, I must say that usually when these charts kind of go back and forth all the time, usually when the fourth time hits, the chance of it breaking increases dramatically. So again, it's a little bit of a mixed story here. Again, I'm about 70% bullish, but there's still that 30% bearishness out there. Um, and I think a lot of the people with the bonds being down, and the VIX really not moving that much, I think we are just, most of us are just staying on the sidelines, not really trading because we don't really have a definitive low yet. I think a lot of these investors or funds probably, you could even argue, got burned in this whipsaw. And again, if you think about, there were probably a lot of people who were long, right? Because if you think about just the move that we've had for years, and the sentiment of buy the dip, something goes down, it's okay, buy the dip, right? We've had that mentality all of last year, and now all of a sudden you come into January after having this wonderful Christmas rally, and a lot of people got caught off guard. So they were surprised to see that sell off. But then there's also those people that I call perma bears. So these are the people that just can't wait for a sell off, right? The economy is always bad. No matter what you do, it's always a bad economy. And so those people probably just couldn't wait to buy puts to go short. And if unless you were really good about reading the charts, chances are in this whipsaw you got burned, right? And especially if you were trading options, I was saying this, options just based on how they lose their value anyway, this really wasn't a good time to trade options. So right now all I'm doing is day trading, and then if the market gives me some sort of setup, I will be putting out trade alerts, and there will be plenty of them. You will be able to choose whichever one you want, but right now there really isn't anything definitive. Again, slightly to the bullish side, but not quite. We need to prove ourselves. We need to take out this candle, this high right here, and then we can talk about it. And of course, the idea is that we would take out this all-time high, and then if you go to my cycle work video, there's even a potential of getting high as much as here, as far as here. And I believe on the cash SPX, that is the 2140 level, and maybe even 2200. So we'll see. Again, the idea is that it has to first get there, right? We first have to confirm to the upside. But for right now, slightly bullish, but don't rule out the bearish case, okay? The world is very volatile. A lot of different things are going on. Maybe a lot of investors are waiting for this Greek situation to go away. Maybe a lot of investors are waiting for the situation in Ukraine to quiet down. Probably earnings season is playing a lot into these decisions, and we just have a little bit more to go. So maybe the market wants to wait a week or two. So we'll see. We'll take it one step at a time. And again, tomorrow morning, watch out for the pre-market report. I will try to post that by 9 a.m.